What is going on, guys? Let me know if you can hear me. What's going on? What's going on? Good morning. Good morning. CPI is about to drop in 1 minute. Covering it live right here. So far, the market is seeing a nice bounce after almost a month, 3 weeks of absolute mess. So expected CPI is coming in at 2.9%. So let's see if we come in below expectations.
We are just seconds away now from February CPI. Rick Santelli standing by the CME in Chicago. Rick, the numbers.
Yes, boy, this is a biggie. This is our February read. Consumer Price Index expected up 0.3, comes in a tenth light, up 0.2%. And in the rearview mirror, at least now, not revised, and up 0.5%, by the way, was a 2-year high we're reversing from. Up 0.2 equals where we were in October. To find a lower number, you're back to July of last year. Strip out the important food and energy, it remains up 0.2 on core. That's following up 0.4, which was the highest level since Feb of 23. 0.2, well, we equaled Dece of last year. Find a lower number, you're in June of last year. Year over year, headline number, 2.9 expected, 2.8 is what we get. Last look was 3%. 2.8 to find a lower number. You're in November of last year when it was 2.7. And do remember that cycle at the end of last year, we actually saw 2.4 on the September read, just to put a face on the fact that we have been lower. And if you look at X food and energy or core year over year, 3.1. 3.2 was what we were expecting. 3.3 in the rearview mirror. 3.3 in the rearview mirror was the highest since May of last year. 3.1, to find a smaller number, you have to really go into the Wayback Machine. You're going to April of 21 when it was 3%. Now, I know many don't look at the following, but if you look at the actual index of CPI, that goes back to 1913. Right now we have 319.082. That's another all-time high going back to 1913. If you look at core, that was started in 1957. It comes in at 325.47. And guess what? Another new all-time forever high. Go use that inflation tool on the Bureau of Labor Statistics and the website, and what you'll find is inflation's running over 20% on a compounded basis going back to pre-COVID. Interest rates initially moved lower as they looked at the month-over-month numbers. You know that parlor game, you analyze these numbers, but in the end, they're still sticky. And just to point out something, our last look, still unrevised, these inflation numbers were hot last time, unlike today where they're a bit cooler. And what happened? We settled on February 12th, the last time January CPI was out, at 463 in a 10-year. It was the high water mark. Hot inflation, all we've done since is go lower. And the reason I point that out is there's a lot of moving parts pushing yields around these days. Andrew, back to you.
Okay, Rick, thank you for that. Steve Leisman is right here, looking at these numbers.
Yeah, there was a concern we would come in on the high side. Everybody said they were looking for upside surprise, so it's really good to come in below here. You got some help from food, Andrew, up just 0.2. You got a pop in the, I have the egg category, but not eggs themselves on the top line data. Meat, poultry, fish, and eggs up 1.6% after 1.9 the month before. Dairy products were down. I don't want to go through too exhaustively. Energy was well behaved. You got a decline in airline fares down 4%. We don't know if that's a demand thing or that's just an energy thing being passed through. And then, of course, the owner's equivalent rent has been much better behaved right now. And where we are is we're going to see some impact of the tariffs. Nobody knows how much. I can't tease it out of here right now. I've been looking. I'd look for core goods used cars would be one place to look for it. That's one place where people are concerned you might see that first initial round. We're going to see some impact in the months ahead. Nobody knows how much. It's very difficult to game it out right now. Right now, the street is looking for rate cuts from the Federal Reserve. These kind of numbers get the Fed closer to where it could be, but you would think it would still be a little bit too hot for them to say, okay, I'm going to cut next week. Right. But in this trajectory, you can say, you know, we could maybe think about one if you don't get a big and lasting. In other words, this idea of the pass-through, it's the big and lasting tariff impact that I think would most likely stay the Fed's hand.
But you still want to see the CPI numbers tomorrow.
PPI.
PPI numbers tomorrow.
PPI is where you would see it first. But again, we talked about this for a long time. There's pass-through. And pass-through, you could reduce margin. That's bad for investors in stocks if there's a margin reduction. But it's better for consumers if they eat it. Remember that chart I showed that you were a little bit perplexed about? All these stations along the way where tariff impact can be reduced. There are 4 or 5 places where you could absorb it. We'll see how much goes along. Has to do with how much competition we have in the business, what the elasticity of supply and demand are.
Steve, thank you, sir.
Yeah, earlier I said that,
What's that?
that I wasn't as worried about that. The concern now is growth, and not as much inflation.
That's true for this moment, Joe.
But the stock market obviously still cared about inflation.
Yes.
Because it's up, the market suddenly is, I mean, who knows where it is at 4 o'clock. But right now it's up over 500 points. There's still concerns about, that'd be bad to have a growth concern.
All right. So if you've been following my videos, I was talking about inflation probably coming in lower than expected, because if you look at the Trueflation gauge, and hopefully this thing loads up here, but this has been on point since the pandemic. So even when they were saying that inflation was 9%, Trueflation was actually saying inflation is in double digits, closer to 12%. And now Trueflation, if this thing loads, I think the site is crashing because it is inflation data right now. But it's projecting that the real inflation rate is closer to 1.4%. And that, obviously that doesn't take into account any sort of future inflationary data or inflationary upticks that tariffs might bring, assuming that those tariffs all go into place. But not surprising to me that inflation came in at 2.8 versus 2.9%. Someone in the chat said that these prices were not down. Anybody who bought anything recently knows this. That's not what the data says. The data, it's a positive CPI, meaning prices went up. It's just how fast are they going up? So, I get the anecdotal sentiment that, oh, I went to the store and this was more money. Yeah. It's saying that prices are up. It's just up by less. So an inflation rate of 2.8%, which is what it came in, versus 2.9 expected, still means prices are going up by 2.8% compared to where they were last year. It doesn't mean prices are down. Now, negative inflation rates, which we haven't had in this country, but Japan experiences all the time, that means prices are going down. But positive inflation rates doesn't mean prices are going down. It just means prices are up at a slightly less rate than expected. That's all that means. Now, we were seeing a nice bounce pre-market. Obviously, the market opens in 40 minutes. Finally, see a relief day. I thought that along the way to this correction, I thought we would see a couple of relief days that would make it easier to short, but we really haven't. This is the first, and this, we obviously, I'm going to be analyzing it, but we obviously don't know if this will hold. But this is the first time that we're seeing a really nice bounce since that Friday, February 28th, when everyone was like, oh, you guys are idiots. This, it was just a tiny little pullback and the market's going up. A lot of stocks are in bear markets, even if the market itself isn't. So, Tesla obviously in a bear market. Nvidia, I think, hit bear market territory as well. If I measure this, Nvidia was down around 30%. So Nvidia in a bear market, AMD, obviously, we don't even need to talk about that. You can already guess it's in a bear market. Amazon barely missed a bear market, but minus 19%. So a lot of these stocks here were in bear markets, right? And I got tons of questions throughout the course of this year trying to update you guys on videos. I got a ton of questions as to, why are you buying stocks if you think we're going lower? Because at some point, the market is giving you the chance to buy a stock that if you look at some of the metrics that you would judge stocks by or evaluate stocks by, they haven't been this cheap in a long time. And at the end of the day, I'm not Nostradamus and I'm not in the Trump administration, right? So I don't know whether a change in policy is going to happen at the drop of a dime or not, drop of a hat. I think that's the terminology. I don't know whether that's going to happen. All I know is what's in front of me. And what's in front of me is I see, Google cheapest that it's been in a long time, Amazon the cheapest that it's been in a long time, etc. Tesla, obviously, in terms of price drop, is, almost a 55% price drop, even though by some metrics it's still not cheap, but depends on how bullish you are on Tesla based on things that are in the works that they have not yet delivered on, right? All of the robotic stuff, the AI stuff, etc. So by some metrics, depending on what you price in, Tesla is cheaper than it's been in a long time. So I don't know, yes, I have obviously my projections, my estimations, my analysis, but at the end of the day, something is too cheap to pass up. And we were hitting that point with a lot of stocks. So I would much rather be the person that was able to, exit short-term positions and risky positions when I did, and have the luxury of choosing what I buy and when now, right? So for me, if I bought Google where I did, I'm much less concerned with further drop to, say that 140, 150 range than someone who is just bag holding after buying the highs. I'm in control over what I buy and how much and when. So that's a little bit of explanation there as to, why I would still buy stocks at a certain point, even if I'm uncertain about the market, if that makes sense. And yes, I still think that the market is going to go lower at some point, but violent bounces are expected. And I actually thought that they would happen sooner than now. And right now we are getting a violent bounce. It's actually not that crazy. The S&P is up 1%. So, hopefully this holds to give us a little bit of relief. Also, portfolios will be up nicely, especially the stuff that we picked up recently. But I'm going to look at liquidity levels here. And see what is possible from a price standpoint. Now, inflation did come in slightly less than expected, right? In my view, it's not enough for the Fed to cut, and that's a very bad sign, because if inflation came in at, say, 2.3%, 2.4%, anywhere 2.5 and lower, then the Fed would be much more likely to cut on March 19th. But right now, the Treasury and the White House are trying to attack yields. And they are hoping that the Fed caves in and lowers their Fed funds rate, which would help in lowering those yields, hopefully. However, Powell said that it's up in the air because we as the Fed don't know what are the inflationary upticks that could result from this crazy tariff policy, right? So the White House and the Treasury already said that they're willing to go through periods of pain in order to bring down yields. And the Fed is saying, we're not going to lower the Fed funds rate because the White House needs to tell us what their policy is. Every day they're changing it. Tariffs are on. No, they're off. No, they're on. No, they're off, right? So unfortunately, I don't think CPI is low enough for the Fed to justify cutting March 19th. I think there's still obviously a chance that they do, but I think that they're looking at their first cut by May. So 2 more months of this volatility here in my eyes, unless obviously Canada, Mexico, and the US come to some agreement that, okay, let's just scrap all the tariffs that we have against each other and let's start from scratch. Reciprocal tariffs from scratch, let's make it fair, right? Which I don't know if that's going to happen within the next 2 months. Who knows? That's the point of trying to strong arm Mexico and Canada's economy, with these tariff wars, is America knows that even if they hit a recession, even if America here, we hit a recession, we will likely be in a better place than if other countries hit a recession. So it's kind of like this game of chicken, more like a game of Russian roulette, to be honest. It's unfortunate because, we are all affected by the economy. I may take a short here to London low, by the way.
Former Treasury Secretary Steve Mnuchin, now founder and managing partner at Liberty Strategic Capital. Mr. Secretary, it is.
You could see that NQ here. This is on the 5-minute chart, but NQ actually is holding up this fair value gap really well, which actually I can't short as long as this is up. ES is weaker than NQ, but if we fall below this and retest that 830 level, then I will consider a potential short. At some point, I think this data wick here, this is the 830 data wick. At some point, I would like to see this taken out. But we have a lot of time here.
Similarities to Trump 1.0. His focus on the economic issues are tax cuts, regulatory relief, and trade. And the president has always believed in adding tariffs. So I think that's what we're seeing in the market today.
Did you push back, though, on some of the tariff efforts in 1.0?
Look, I've been a believer in tariffs are important in getting people to the table. And there's no question, if you take China, there's no question that the president's tariffs were the only reason they came to the table. I support the president putting another 20% to get them back to the table. They haven't lived up to the phase 1 trade agreement, and that should be the priority. And if they do, the tariffs can come off. And if they don't, I'm sure the president will add more tariffs.
What do you make, though, and what do you think the public should think about the uncertainty that all of this has clearly created within the economy? And you can look not just at the stock market, but so many different indicators where CEOs and others who I think people thought might be making investments are saying, you know what, hold on, we got to actually watch and wait and see what's going to happen before we do anything.
I think that people are overreacting a bit. So let me just start off with, this discussion around a recession. I don't think we're going to have a recession. I don't think the outlook looks like we're going to have a recession. And Larry Summers saying there's a 50% probability, I just don't agree with that. We've had a 5% correction in the S&P. We've had close to a 10% correction in the NASDAQ. Both of these indexes were at very high levels and had huge tech spending built into these. So I don't think anybody should look at what's a natural, healthy correction of these indexes as indicating that the economy's in trouble.
Steve, I didn't, Mr. Secretary, I did not see everybody around the crypto summit. I don't know all who was there. I know the Winklevi were there. I know.
All right, we're getting a nice bounce off of that 830 level. I don't know if it's enough to take out data highs, but right now I'm in a wait and see mode. I want to see if we close below this and hit that 830. Obviously, this does look like a power of 3 here, where we have, since London into New York, we have consolidation, this manipulation here. And I want to see if we get a distributive move to take out London. Remember, we do have PPI tomorrow as well. And then Friday, we have consumer sentiment. But we did take out, if you look at the high time frame, we are in, oh yeah, I think that 830 will get taken out. the 830 high. Maybe. I wonder if we make it up to this fair value gap today. If so, we would take out the 830 high. This is on the 4-hour. ES has one as well. So a few things to monitor here. If we take out that the 830 high, that fair value gap up there will be the draw on liquidity. If we close below this on the 5-minute, then you'll know we'll want London low at least. TLT down. Yeah, dude. Inflation came in lower than expected. And like I said, they're not, the expectation is that the Fed doesn't cut rates. So for now, yeah. And plus, remember, you got to think of stocks and bonds as inverse. Guys, there's 1,500 of you and 160 likes. This is crazy. We have to let people find this good information. If you want me to take more trades live on stream, just a little click of the thumb. Any discounts on Discord? Unfortunately, not at this time. But if you did want to trade with a funded account, I'm giving you 80% off Apex accounts. Just use code TTT at checkout. That's a crazy deal. Not every time people buy into stocks, but right now there's an inverse relationship between bonds and stocks. Yeah, you don't have to agree with me that we're going to get a recession. That's perfectly fine. I can be wrong. And I'm okay being wrong. Look, guys, here's the thing. There's a big difference between someone trying to be right on every prediction and someone making money. That's a big difference, okay? As long as I'm capitalizing on my analysis, I don't really care if I'm right every time. Okay. So my approach is very different than some of these pundits on TV or, other people who do finance or trading on YouTube. I will never not look for ways to make money or not look for investments. So whereas other people might say, oh, we're going to get a recession, don't buy anything. Or, we're not going to get a recession, buy every single dip. To me, that's not analysis. To me, I have certain price levels that I can't ignore at some point. And if the stocks get to these price levels that, based on my analysis and the companies I want to own, are lucrative and are actually cheap, not every dip I'm like, oh, this is so cheap. No, actual analysis that with the help of AI, if you guys never went to school for finance or never studied this stuff, you can now use AI to help you evaluate stocks, okay? Nobody has any excuse here. If stocks get to my levels, I will buy them. That's the big difference. So, me buying Tesla or me buying Google in bear market territory or Amazon in bear market territory, based on my analysis, if we get a recession, okay, I will be ready for that and I'll react accordingly because that is my base case, right? If we don't get a recession, I had the chance to pick up stocks at prices that they haven't been in at least 5 years. Not absolute prices, but valuations, right? So, yeah, I'm happy to be wrong if we don't get a recession, and you don't have to agree with me. I'm not the end all be all. I'm perfectly fine being wrong, as long as I'm not just blindly or emotionally saying, we're going to go up, buy everything, or we're going to go down, don't buy nothing, right? Like, that's not analysis. So happy to be wrong, and happy, if someone respectfully disagrees with me, that's great too. I would love to hear your perspective. If you don't have savings at emergency fund, you shouldn't be investing, certainly shouldn't be trading. I don't know if you're referring to somebody else up there, but I agree with that sentiment. I don't know if someone said something that triggered that, but I agree with that sentiment. Meta short at open? Not quite yet. Not quite yet. You were right from the beginning. I don't know why someone would disagree, because I'm a human and I can easily get things wrong, but I still have an obligation to manage risk and try to put myself in the best position to capitalize. Appreciate it. No. Tony Miranda, what do you think of IONQ? Like, imagine you have the opportunity to buy some of the highest quality stocks at valuations you've never seen, and your first thought goes to IONQ. If your portfolio isn't filled with quality first, you have no business buying shit stocks. That's my philosophy. Where do you see TLT going by the end of the year? It could stay right here. You're buying TLT for the surefire 5% dividend. When will you start loading more? I don't need to load anything, bro. This is not a fucking garbage truck. Is Palantir a good short now? Guys, let the market open, okay? Let the market open. You don't need to rush everything. MP3 Fitness, appreciate your donation to St. Jude's. Thank you for always donating too. The dollar is rising like crazy here. Well, not on the daily, it looks like a little candle, but intraday, which is probably not going to bode well for gold. I wonder if there's a gold short. You're very welcome. Yeah, I don't know if VIX drops to 19 today. I do have UVIXY puts. And I have HSY calls too. Anonymous, thank you so much for your donation to St. Jude's. Have we had the CPI data yet? Dude, Google's free, ChatGPT's free. You can easily type that question into there. And yes. Yeah, the thing that's scary here is that the indices are still in a major, have major bearish imbalances that they need to get above. Otherwise, if you look at the 4-hour, right, market structure is just making lower highs and lower lows. And there's this 4-hour fair value gap on both NQ and ES that we can tag. Appreciate it. I don't think more ads is is the answer. I actually don't know how to generate ads on lives, but the live streams are just honestly something I do for the public, which is why every live stream I've done since 2021 has been a fundraiser. I can easily add a whatever, I don't know, kickback or donate button or whatever people do, but to me, I mean, but you know, I view this as like I don't know, something I do for the public. So, and when people make money on the stream, they end up donating to a good cause. So it's a win-win. Do you stream every day? Yes, but not on YouTube. I stream in the Discord every day. But for big events, I'll stream here. I did think about streaming pre-market every day on YouTube. But honestly, it gets too much. And at some point, I need to focus on my own trades. So I usually take the pre-market to trade in silence. And then I'll go live on the Discord at Market Open. How could you join the Discord? It's a link in the description, bro. Honestly, if you can't find it, either I'm not doing a good job or you don't know how to use the internet. There. What's your favorite song right now? Oh, man. When it comes to music, I'm schizophrenic. I'm all over the place. I don't have a favorite song right now. But I've been listening to a lot of Queens of the Stone Age, which I go through my phases. But they had an album from 2002 called Songs for the Deaf. I really like that album. Yeah. A lot of people don't know that Dave Grohl was actually on that album. He was like a guest band member for that album. So he's all over that album. That's why the drums are so sharp on that album. But yeah, I like everything, man. I like Latin music. I like, obviously, hip hop. Rock, blues, classic rock. Gold is getting interesting here. A little grumpy today? Do I look grumpy? Bro, it's early in the morning. I'm just talking about the markets. Sorry. This dude thinks just because I can fake my excitement with his mother that I'm going to be like that 24/7. At some point, I need to take a break. Are you Chilean? No. Are you traveling to London anytime soon? Not that I know of. Which is the best stock for today? Dude, this is not a fucking outdoor market. I don't know what that even means. The best stock for today? What's your go-to drink with alcohol? I don't drink a lot, man. So these days, it's usually if me and my girl are having a nice dinner, I may have a glass of wine. But I don't drink a ton, to be honest. Right now, I'm waiting for some movement here. I really want to see RTY looks like a really nice setup. NQ and ES. I'm waiting to see if they take out this data high from 830 and run into this higher imbalance up here. Or do we drop first, bounce off 830, take out a low before going back up? So right now, that's what I'm waiting on here. Gold is a little jittery due to the fact that the dollar's up because inflation came in lower than expected. So right now, the dollar looks like it's ready to finally have some sort of rally. It's been beaten up really since the inauguration. If you look at January, because of the tariff shit and the cutback on spending, etc., that has really been killing yields, which kills the dollar. But yeah. So yeah, the yield curve is back to being uninverted. This is something that, prolongs the stock market a little bit. We've seen this back in the period of the late 80s, but in 2000, the minute that we got uninverted, we hit a recession. 2007 was a little different. We inverted, uninverted, inverted again, and then we had a recession. So it's very similar to what's going on now. We inverted, uninverted, we are back inverted again slightly. So this prolongs a potential recession. Let me check on some individual stocks real quick. Apple slightly up, not a ton. Meta up quite a bit. A short candidate for sure. I will decide later in the day, but we are coming up against the 100-day moving average and the previous candle body from Friday. And I think that Meta does get to the 200-day. Microsoft, I think, is in really bad shape. Amazon with a very nice bounce off the 300-day. We went from 190 up almost $10 now pre-market, which I'm happy to pick that up. Google's still hovering at the 300-day. There is a chance that we drop further because of all the antitrust, Google search is dead type of talk. I covered why I don't think AI and LLMs will affect Google search. I may do a full deep dive on Google if people are really interested in that stock. Nice jump from Tesla, got to the 220 level that I was eyeing. Now back up to 245. I still don't think the pain will be over for Tesla until April, May, which is when it tends to bottom out before a summer rally. What do you see in Uber? Uber up nice pre-market. Uber has a great cash turnaround story, probably one of the best in the entire stock market. Wow, right now the market is just chilling. We open in 15 minutes, and at that point, I think we'll see some movement here. What are your thoughts on ANET? I don't have thoughts on ANET. American Airlines? No, I have zero interest in airlines. AMD? No. I've talked about AMD countless times. I think it's overvalued. Can this rally continue through the week? Why can't it? Do you think I should short an over 100 or wait? I think if you're asking a random person on the internet if you should short, you probably shouldn't be trading. You should be learning, practicing, paper trading, journaling, documenting, gathering your stats, figuring out your strategy. Asking a random guy on the internet is probably not the way to go about things. Okay, let's see here. Cranky boy. It's not what your mother calls me. She said I'm rather joyful. Your thoughts on Palantir. Thoughts. Are you offering 1 week trial? No. Bro, this just confirms never meet your heroes. We've never met. Bro he really tried to use a quote that he read off Instagram that he thought was smart as shit. Never meet your heroes. But you would have to meet someone in order for that quote to apply. This fool takes jabs at me all morning and then says, this just confirms never meet your heroes. Don't worry, Tony. We will never meet. I have done quite a few meetups and have enjoyed every single one of them. You know why? Because respectful people show up. But crybabies that try to take jabs and then are like, oh, you're so mean to me. Why did you say that? Because your pops never taught you that if you say something, someone might say something back. You spend all day being a keyboard warrior, hoping that no one responds to you. The minute that someone does, you're shocked because you've never seen it before. Oh man, he's a human being. If I say something mean to him, he might say something back. I've never seen this before. What is this, Dad? Sorry, son. I should have taught you, but I didn't. Frederick K., appreciate your donation to St. Jude's. Thank you so much for your 50-pound donation to St. Jude's. Thank you. Do you ever give reviews on your traveling? On Instagram, they're not really reviews, but yeah, I mean, on Instagram, I'll post about my travels. Right now, I'm in New York. I want to ask you something on the Discord off topic about Italy. Okay, ask me. Yeah, happy to answer it. If you had to fly anywhere right now, well, right now I flew to New York. So there's your answer. I wonder if this is setting up a short here. I wonder if this is setting up a short here. Joey, I'm glad I can give you a laugh on your commute on the train. Oh, man? Yeah, I've been there before. It's really beautiful. People are nice, too. Food is great. Coffee and tea are amazing. So right now, I'm waiting to see if the market opens in 10 minutes. We will likely get violent spikes in both directions at market open. But what I'm waiting to see is, okay, YM is the first casualty of war here. It's the first one to fall below 830 open. If we close below this, we'll get a CISD here. Best place for trekking? I don't know, bro. I'm not a trekker. Maybe Afghanistan or Iran? What candle using for your CRT? I'm not trading CRT. What time frame? This is 5 minutes. But I'll swap between 5, 3, 2, and 1. The 4 minute gets no love. I did look at the 10-year 3-month. Stop asking me to look at it, bro. I did look at it. Waiting to see if ES falls below 830 here. I sent a message whenever you get a chance after you do. Oh, okay. I bought put on AMD, expiration 2 months. Nil, please stop spamming the chat, bro. I'm about to ban you. I think buying puts, you have to wait for a pullback. I don't think buying puts at the low is great because you're paying the most for it. I'm feeling a fake out. Well, definitely don't go by your feelings when you're trading. I need to see it close below this and a retest of 830. And then I might take ES short. ES is a lot weaker than NQ. How high short squeeze can go? 6,000 possible. Nothing changes sentiment like price. It's crazy, man. You get a less than 1% rally pre-market, and everyone's now calling for new highs. Unplugged. Appreciate it, man. Thank you so much. All right. Gold is about to take London low. It's funny that gold and the dollar are dropping at the same time. CPI data was released not around 7:30. CPI data was released at 8:30. There is no around. It was released at exactly 8:30 Eastern. TLT going up. Most of you mentioning TLT should not buy TLT. You talk about it like it's a meme stock. It's just a place to park your cash. That's all. All right, the market opens in 5 minutes. Holding leaps in this environment is crazy work. I want to short YM, which is the Dow Jones. Yes. Futures rising means the stocks in those indexes are rising, dude. I want to see if a short on YM is going to work here. The market opens in 3 minutes, but the Dow Jones right now is the only index that closed below 830. I ideally want it to close below this 41690 level first. But I think a short is coming. Nice. I would like to see a close still below that level. The open of this green candle here. If not, then it's not confirmed yet. One second. 1 minute until market open. I'll be right back. 1 second. Very nice drop on YM. Yeah, we're not getting a significant close below that. Do I want to take a low risk entry here? Or should I wait for CISD? Yeah, I wonder if this can make it to London. Or does it get hamstrung at that 15-minute right there? Right now, I have my stop set to break even. I don't know if I want to take this here, to take profit here. I think we can get to London, but I think we get hamstrung at midnight. So I might close this. Let me see something. Yeah, there's a 15-minute right here. And the market isn't really... Well, we do have bearish SMT between ES and NQ here. ES making a lower high, NQ making a higher high. So if ES drops, I think that can give further reason for YM to drop. There may be a short on ES too, by the way, on the S&P 500. Nice drop. Up 675 on this. Hell yeah, 700. That's more than 2-to-1. The London low was actually a 5-to-1 trade. Ended up closing it for about 3-to-1 on YM. All right, that's the first one down. Took that in my real money account. Ankit, good job, bro. Yeah, YM was the only index to me worth shorting. The reason is, if you look at where CPI data landed, right? It had this imbalance here. And the next imbalance was above this block of orders up here. So this to me was a significant imbalance for the day. And if you look at the shorter time frame up here, that is the 4-hour fair value gap up here, right? And then when we fell below 830 and then retested this fair value gap at 830, and then obviously the targets, you have the 15-minute fair value gap down here, you have midnight and London low, but 700 per contract, I was okay taking profits on that. And then we'll find the next one. Are you going to take a look at AT&T? No. HSY, yeah, I think I'm down 25% on HSY calls. Let's take a look at it. So we have this previous support resistance flip level here. I likely will stay in these. They just filed, I think they just filed an 8K. Yeah, I will likely stay in these. I mean, you know, we are near where I would have stopped out at, but we are also in a big support resistance level. So based on momentum, I will likely stay in these. But yeah, currently they're down about 25%. The other index that looked shortable to me was the S&P 500. Wow, a YM got to London low. Very nice. I hope we can retest this 830 level here on ES. Did NQ fall? Oh, wow. NQ is so strong today, man. Likely because of tech. NVIDIA's up 6% today. Tesla's up 7%. Trade on YM, I wouldn't rate it as A+. just because of the time, I would rate it as A for sure. I'm trying to see if I could take a short here on ES, but the only problem is NQ is so much stronger. I do think NQ eventually gives this up, though. NQ is not even at 830. And ES is below 830 and 930. This dude says short NVIDIA. This is why retail never wins. Imagine you want to short the strongest stock on the market. Come on, retrace back up. Give me an entry here. All right. See, NQ is propping the market up. That's what makes it hard to short the main indices like ES and NQ. And why it was a lot easier to short YM, which is sometimes correlated, but definitely separate from the correlation that ES and NQ have. YM took out London low. I do want to see if it sets up a long here. The long would look something like this. I mean, right now, if YM is the only index to trade, I'm fine with that. I don't make the rules. But what I want to see is us pop above here and retest this midnight level in this 5-minute fair value gap. I'm going to set an alert here just so I don't miss it. Oh, already did it. I mean, already tagged it, but I think this may be the thing that brings NQ down. I did not take this ES short, but if you took it, congrats. So far, the only play on the day was a YM short. Yeah, it's unfortunate that the VIX is only down 5% and we're still at 25, even though CPI came in better than expected. Wow. Oh, that would have been beautiful too on ES. So I think this is finally what takes down NQ today. If we close below this, I think what's going to happen is ES is going to visit at least London low. And NQ will stop short of that. Or ES is going to visit. It's hard for me to think of this right now, but below London low, you have yesterday's low. I don't know that ES gets there today. Maybe it leaves that for PPI tomorrow. But I think London low is the draw on ES. And NQ might stop short of there. If you took ES, it's already offered 2-1 here. Very nice bounce on Tesla. We're up $26 per share in 1 day, basically. Yeah, Tesla, I don't think this is the bottom for Tesla. Even if that was the interim bottom price, that whatever, slightly below 220, and it just chops around here, I do think it will bottom out by April, May. Wow, YM keeps dropping past London low. YM probably heads to yesterday's low. So if data is good, why are we shorting? What do you mean? Because the setup showed itself. I mean, I can appreciate those of you who are beginners in the market asking what seems like a sensible question, but you will soon realize data means nothing. Data is just an excuse for liquidity to be taken. So this is actually a very good example and a good question, right? Retail traders think like you, which is if data is good, why is the price going down? It's because retail traders say they're late. They're always late to react, right? So they're like, oh, CPI came in better than expected. Oh my God, the market is up 1.5%. I'm going to miss everything. Let me just buy calls here or buy shares here, right? And essentially what you're doing is buying the top, and the market is using you as liquidity, right? So they're like, oh, wow, we have all these buy orders. We're going to dump our commodities, derivatives, stocks, whatever, onto the market because all these buyers are buying in at these liquidity levels. And that allows them to get their shorts in because their shorts are going to overpower your longs, right? So this is why newbies always ask, why does the market go up on bad data or go down on good data? It's because in an intraday sense, right, in just one given day, all the market is trying to do is use you as liquidity. And so your job is to try to trade with that, which is why you saw me take a YM short or propose an S&P 500 short, right? Because I'm not looking at data is good. That means market up. No, that's what they thrive off of, is people who think that, which is most retail. You as a trader, as a, developing expert trader, are required to spot where these areas of liquidity are, right? And I don't know whether you just joined or not, but that's why I was saying you have this consolidation. Clearly CPI was manipulation, and we're likely going to get a counter move, which is distribution. On YM, that setup on the Dow Jones, that set up way better than the S&P 500 and NASDAQ. The second setup was nice on S&P 500. So I only took the first setup, but it's set up nice on the S&P. And NQ being the strongest index is the one that's holding up still in this imbalance. But if NQ loses this imbalance, then ES is going to get dragged down further to at least London. And NQ might not make it to London. It might get dragged to midnight, right? Down here. But either way, this thinking of why would you take a short if news is good? Because I don't care about the news. I care about where is the manipulation? That's all I'm looking at. If price, by the way, if price manipulated down for CPI, I would do the exact opposite thing. I would take longs after the manipulation. So, I don't care what direction the market is going. I'm just looking to spot where the manipulative move is, if that makes sense. For HSY, I put the update in the Discord. Tesla's up huge. Will it go back down again? Typical, bro. Typical. Again, another retail thinking, right? I told you that if you were bullish on Tesla, I don't care if you think the market might go down further, which is still my thought. Your obligation is to take what's in front of you at prices that are too good to pass up. Tesla now rebounds from 220 to 250, and immediately we're getting people asking, is it going to go back down again? Not my problem, bro. What about the ceasefire? News flash, the market doesn't care about geopolitical news. The market only cares about money. Doesn't care about the war in Ukraine. Doesn't care about the genocide in Gaza. Doesn't care about the genocide in Sudan. Doesn't care about what's going on in Syria. The market only cares about money. That's it. One of the best periods in the market was during World War II. And unfortunately, tens of millions of people died. Well, past CPI, like obviously we've, had 3 weeks where we only had one solid green day in 3 weeks. So this is what I was saying, that, I expect there to be some relief rally. I personally think that the base case is lower, in my opinion. I still think the market is going lower. The market we're so used to fast recoveries from corrections, especially after the pandemic, because we printed $5 trillion. So that liquidity makes its way to the market very quickly. But in this day and age, where with the rate battle, with the yields battle, with the fact that we're trying to forcibly slow growth, I think that it's going to be very hard to jump in the way of that. Now, obviously, the Fed can soften language. The White House can soften language. And yeah, the market is going to react very quickly to that. But my base case is lower. But again, that does not preclude you from doing your job as an investor. I want to see if there's potentially another short here. I mean, see, this is what makes it suboptimal once you hit certain levels, right? So the S&P 500 hit the 15-minute fair value gap. And NQ still didn't close below 830. So to me, this potentially could look like a bullish pop to take out data highs on at least NQ. I don't know that ES gets to data highs right now. Maybe later in the day, but not right now. But I do think that London low We have a breaker right there, but I think the short we took earlier was an A trade. This right here is more precarious. I'm going to wait to see what the extent of the NASDAQ's little rally is here. I would much rather it take the high, the 830 high, the CPI high. Oh, hold on.
Just in the last few minutes, Canada now saying they will be putting 25% tariffs starting tomorrow on about $20 billion in U.S. exports. They say they'll mostly be targeting steel and aluminum, but they're also going to hit some other U.S. imports. They say that'll include computers, sports equipment, and cast iron products, just as some examples. So expect more details to come from Canada, and I would also expect more retaliatory announcements to come today, guys, as other countries start to digest this move, because remember, this hits everybody across the world, so we do expect to see more retaliation. And now getting back to where Steve left off, this is the rare policy move where we have a pretty good idea of what the economic impact will be, because we saw this happen in President Trump's first term when he first imposed these tariffs on most, at the time, steel and aluminum imports. That was back in 2018. He then later carved out a handful of countries, in part because of the economic impact that we saw. The upshot at the time was that there was some modest help for domestic steel and aluminum producers, but all steel and aluminum users were hurt. And as Steve was saying, since that's a far larger subset of the economy, the net impact overall was a negative one. So just to put a couple of numbers behind it, some research from the Federal Reserve, it found that the tariffs boosted employment in manufacturing by about 0.3%. That's how much it helped producers. But the rising input costs then dragged down the same sector's employment in manufacturing by a little over 1%. Retaliation pulled it down another 0.7%. So then on net, the impact was about a 1.4% hit to manufacturing. The Council on Foreign Relations says that was a direct loss of about 75,000 manufacturing jobs. And to put it more simply, economists at the Peterson Institute estimated there was a cost to consumers of about $900,000 for every one job saved or created in the steel industry. And remember, guys, those tariffs impacted only a fraction of the steel and aluminum imports that are seeing new duties today. So we can expect that impact to only multiply now that it's a bigger move. Guys.
Megan, it felt like in Trump 1.0 that the tariff policy was really solving for what you just laid out: job preservation, preservation of manufacturing. This time it feels a lot more muddied. It feels like, one day it's about fentanyl, one day it's about, making sure that U.S. manufacturing remains competitive and jobs are saved. What are you hearing in Washington in terms of the priorities that they're looking for? Because that confusion makes it difficult to assess, what exactly is going to happen next. If the fentanyl issue gets solved, then are tariffs going away? Or if the manufacturing preservation, if they find workarounds, does that go away? But without really knowing what they're solving for, it makes it kind of challenging.
Absolutely. You are hitting on what I hear the most about from industry, from companies, from consumers, is that it's not clear what the goal is with these. And because of that, people don't know how to react. They don't know what the overarching priorities are. You're absolutely right. First, it was fentanyl. These tariffs are about national security. The reciprocal tariffs are about fairness and a level playing field, and maybe the trade deficit, and maybe just some longstanding gripes with the EU and with Canada particularly. Those are the ones we hear the most, where the president seems to have some personal frictions or some personal gripes, I would say. So what I hear from the White House is that it shifts almost every time that you talk to them. They're focused on the same pool of things that you and I have now both mentioned, but they're not always leaning on just one. Remember, a few weeks ago, they said they were never going to take the Canada and Mexico tariffs off until there were 0 fentanyl deaths in the U.S. Obviously, we didn't get to that point. Then they said they talked to the car companies. They didn't want to hurt them. That's how they removed about half of those. So we just don't know. And you're right that industry does not like that they're using tariffs to try to solve for non-economic issues. We will have to see how that develops.
We will have to, Megan. Thank you very much. As we head to a break, here's our roadmap for the rest of the hour. We'll discuss the tariff fallout for all.
All right, you're starting to see, like I said, a little bit of weakness in the market, but Nasdaq's still strong. Unfortunately, like I said, I personally don't think that this is it. You can see Tesla here bump up against that 300-day moving average. You do have a daily volume imbalance here, right? And I think, I don't think we see something like this on Tesla. I think it chops around until at least April, May. Meta popped back above the 100-day, which is why I'm contemplating not shorting here. If it closes below today, below the 100-day, then I may take it short. But right now, it looks like it might want to pop to a little bit higher of a retrace. I still think it will hit the 200-day in this broader drawdown here. Amazon, nice bounce off the 300-day. AMD, I think it's going way lower. I was hoping that it would get up to this 106 area to take it short. Microsoft, to me, this is a very sad case because it is one of the stalwarts in the Mag 7 and American tech and American companies in general, but its growth has not been impressive at all. and it is spending a ton of money on AI with, the market is perceiving without much to show for it, even though Microsoft is one of the few companies that can actually prove that it made, I think, 11 or 12 billion dollars of its last earnings report were attributed to AI. So it is one of the few companies that's monetizing AI. But unfortunately, this pattern here is one of the reasons why I thought we would get a broader market decline, because when Microsoft does this and when the chip stocks do this, so if you look at the SOXX ETF, this usually leads to further declines. So both of them acting like canaries in the coal mine right now. But yeah, let me check on, is NQ going to give us a short here? Your day trading videos helped me pass my first prop firm. Hell yeah. Congrats.
Tariffs on some U.S. imports. This comes after President Trump's steel and aluminum tariffs went into effect, adding to uncertainty for the auto sector. Here with his take on the road ahead, no pun intended, for the automakers is former Ford CEO and CNBC contributor Mark Fields. Mark, thank you for being here. So there are a lot of different ways that the expected tariffs will impact the auto industry. Can you just help level set for us where we are right now and how it's impacting corporate decision making in the sector?
Well, Leslie, right now, in every boardroom, in every automaker, any investment decision.
Shut up. RTY is also dropping as well. So that power of three effect and the manipulation having is playing out like we think. I think there will be a short on an NQ here. Hey, thank you, man. I appreciate you. You made a lot of you said buy QQQ at the 200-day back in 2022 and made a lot of money off that. Yeah. Here's what I want you guys to focus on, right? For those of you that are, let me see. I have something to show you. Okay, look at this. So it's very important that you, in my opinion, it's imperative that you buy in downturns. So just like that guy that was asking me, is it too late to buy Tesla? It's really important that you buy at the price points that, using your fundamental and technical analysis, which I've showed you in my videos time and time again. Watch the last video where I go over it. The last two videos, really, where I go over roughly how to do that, right? Obviously, if you're in the Discord, different story, you get all of my analysis. But if you're just trying to get a rough sense for how to do that and you're not in the Discord, it's really important that you buy in downturns, because if you do, these are your results 1 year, 3 year, and 5 years later. If you don't, these are not your results. What do I mean by this? If you look at, let's just take a look at QQQ since someone mentioned it. Okay, let's take a look at the weekly on QQQ. If you got scared out, right? So say you bought somewhere near the highs and you were scared and you didn't buy the whole time. Look how long it takes you to recover. Now, in this age of, after the pandemic of easy money, the fact that we printed $5 trillion, the recovery was quick, but it still took almost 2 years to get from here to here, back to here. Someone who bought 20, 30% down, right, is profitable almost immediately. If you bought at these troughs here, you are profitable just a few months later. And a year later, 3 years later, 5 years later is when you tend to see stuff like this. This only applies to you if you actually bought the decline. So even when the decline is bad, right? So after declining 10% or more, in 2009, we declined, the total decline was 57%. 2016 was a correction. 2018 was a correction. 2020, bear market, we declined 34%. 2022, we declined 25%. So regardless of how bad it gets, if you bought the decline as opposed to just sat on your hands, waited for stocks to rally again, and then bought the top, if you just bought the declines, you are profitable all the time, right? Even in the worst of it. So you are much better off buying the crashes. And that's why, you know, regardless of what my base case around a recession is, regardless, right? And I could be wrong, by the way. I don't have to be right. But regardless, it's your obligation to pick up stocks at valuations that just are too cheap to pass up at the moment. So I hope that, I know it feels like shit buying something that's down 30, 40%. I know it doesn't feel great, but it will. And not that far, not that much after you do your job, will it get really good. I mean, even if you look today, right? Just look today at your portfolio. Look at the gains today. Just off of a little jump in the S&P 500 and NASDAQ, right? Where you have NVIDIA up 6%, Tesla up 6-7%. Look at the difference that one day can make on your portfolio. Now imagine that prolonged, meaning after we get out of the bullshit, after we get out of the trough, imagine just days of green, 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 until we get back up to previous highs, right? So imagine that when 2021, when we dropped and you're buying, okay, minus 10% I'm buying and minus 20% I'm buying. Cool. So your average is somewhere here. Now imagine how short your recovery period was and how violent it is from, say, your average was somewhere here, right? Because realistically, you're not going to pick the absolute bottom. Say your average was somewhere here. Look at how violent this is now, right? And just imagine the individual stocks that you're in as well. So as opposed to someone who is here and finally bought stocks because it was, you know, their retail is always late, and then got so scared and is crying this whole time. It took 2 years just to break even. Anyway, hopefully that helps. All right. I think this is a relatively easy day so far. And I think another short opportunity might set up during the 1050 macro. If we get below this on NQ and come back and retest, what level is this? 830. We get below on this on NQ, come back and retest that 830 level, I would likely take this short to at least midnight. And hopefully by then, ES will get to London low. And then we'll see later in the day how that sets up, if a long ends up setting up or not. Palantir might set up a short, a multi-day short. Do you see Tesla going 200? Homeboy wants the absolute bottom before he jumps in. You cannot accept buying it at 220. Has to be 200. Because he has to bottom ticket. And before you know it, Tesla will be 350 and be like, oh man, I should have bought it at 220. Please come back down. I'm praying for the dip. I swear on the next dip, I'm going to sell my wife's wedding ring and sell my mother's house and go all in. I'm going to load up the truck. And then the drop comes back to trying to bottom ticket. Is this the absolute bottom? Please tell me if it's going to drop $1 more. Please. Because I cannot fathom buying Tesla at 55% off. I need the bottom. And the cycle goes on and on and on and on. That's why retail will always be retail until you force yourself to change these habits. Would ES be a better short? Yeah, it's weaker. And I think ES has a lower target. But when you look at this type of divergence, you know, if you're targeting London low for ES, because NQ is much stronger, it's going to be very hard to target London low. So you would target the next liquidity level up, which is midnight, right? So if ES gets to London, you can imagine that NQ gets to at least midnight. Now, it could go below that, but you have to keep your take profits at realistic levels. All right, guys. If you've been following the videos, you know what my plan is. You know where I bought certain stocks. If you want to trade live with me every day, link is in the description below. I go live at market open every single day. There is a more affordable tier if all you care about is long-term analysis. I think it's like $35 a month, which is crazy. But that link is also in the description. Get yourself an Apex account. Use code TTT at checkout. Gives you 80% off if you wanted to trade futures with a prop firm. But today is gearing up to be some pretty nice price action. Not bad. Took a short on YM so far. And I think we'll have another one or two opportunities. Yeah, the stocks took their pre-market highs and are really dropping off these pre-market highs. I have a question. As a beginner, should I trade with margin? Interesting, bro. Very interesting question. Pretty self-explanatory. I don't think you need to ask a random YouTuber that question. It's pretty scary, actually, that people will act on it if I said yes. And it's pretty scary that someone would ask that question. And there you have yet another reason why there will always be liquidity in the markets. As a beginner, should you trade on margin? What do you think, bro? As a beginner, you shouldn't even be using real money. Paper trade, bro. Trade a funded account. What do you think about booking? I don't think about booking. Juan, appreciate your donation, bro. Juan is always donating. A gem of a guy. Got murdered today? Today was a really pretty easy day not to get murdered, I'll be honest. Serrano, appreciate you. Always donating as well. Thank you so much. Ben says, don't listen to these pros. Go get a $1 million loan, go 50% margin, and start your dream job. Fuck me, bro. HSY killed me. A 30% down on an option killed you. You probably shouldn't be trading either. If one trade kills you, you shouldn't be trading. No trade should be more than 1% of your portfolio. And that dude is in the Discord too, which is crazy. HSY killed me, bro. That one trade killed me. Ooh, this is going to set up nice here. In Apex, yeah. I mean, the problem, not problem, but the trick with funded accounts is that they allow you to trade as if you're trading a 50K account, but you do have a max drawdown. So it is a little bit of a trick there. But I would personally say, right, say you have a 50K account and your max drawdown is 3K. I wouldn't take more than $250 per trade, right? Now, why is that? Because that allows you 250, 254. That allows you at least 12 trades, right? If your drawdown is 3K max, if you only risk $250 per trade, that allows you 12 trades in a row, right? And you shouldn't be losing 12 trades in a row. And if your risk management is on point and you're doing 2-to-1 where you're making 500 for every 250 that you risk, you should come out profitable if you're able to stick to that. So with that said, that means you likely should be trading micros instead of minis. So micro ES, micro NQ instead of minis, and you could take however many micros per trade that would make up for that 250 max loss per trade. Okay? So sometimes it'll be 5 micros, sometimes that'll be 3, but nobody wants to trade micros, even though it is really your bread and butter. And that's on a 50K account. Obviously, if you go 300K, you can trade minis. But the principle stays the same. You want to allow yourself at least a double-digit number of trades to be wrong, right? So 10 to 12 trades, meaning your risk shouldn't be more than $250 per trade. That's the difference with funded accounts. Ron, appreciate your donation, man. Thank you so much. Topashi says, I went 10 contracts. Even I didn't go 10 contracts on HSY. And I guarantee you I have a bigger account than you. Not trying to flex. I'm just saying. 1% per trade, dude. Which are the micros you mean? MNQ, MES. I think we'll finish green today. We are still green, bro. What kind of revelation is that? Bhavya Chopra says, I'm not going to do the accent. I'll get canceled. I could do a really good accent. He says, I think we will finish green today. Motherfucker, we are green. What kind of suggestion is that? What kind of prediction is that? That's like walking into an ice cream store and be like, I think they're going to have ice cream here. If I get this right, I'm a genius. No shit. You must make money from YouTube to sit here and listen to people. I'll share my YouTube stats with you. Hopefully YouTube doesn't ban me. I'll tell you exactly how much I make from YouTube. It will actually be depressing to you how much I make from YouTube to sit here and listen to this. In reality, I really honestly enjoy making good trading content. Honestly, I really enjoy trading live. I enjoy making good trading content. I enjoy educating. I really try to get, all jokes aside, my main goal is to try to get people away from dumb retail concepts as much as possible. Like the clown that asked me, I'm a beginner, should I trade margin? Right? Those are like the base level questions, all the way up to a little more sophisticated questions, right? Like, should I, do you think AMD is at a good valuation here? Right? So you get the full gamut. But all jokes aside, my main goal is just to try to get people to think more logically about the markets and less emotionally. Like the guy who is in the Discord who took 10 contracts on an options play that if he got wrong would wipe out his account. That's just crazy. I'm looking at the short on NQ, but oh yeah. Someone asked me how much you make from YouTube. I'll show you right now. Just so that I'm transparent as fuck. This is, with all the views that I have, this is how much the estimated revenue is for the month. So not only do I turn off the monetization on the lives and I turn them into live streams, but this is, I endure all these questions for, you know, however much a part-time McDonald's worker gets. No, that's not just from live streams. Obviously, that's from videos that I make for you guys. $0.10 per silly YouTube question. You sell products that make a lot more? Dude, it's a service that I provide. Like, do you work for free? You want me to just sit here and work for free? How about you work for free, Josh, strategist? Come work for me. Salary, 0. You can edit my videos. You could be a sidekick. You can sit right here, but I won't pay you anything. Fucking, man, people online are so dumb. Oh, but you provide a service and it costs money. No shit. You have a job too. I spend all day providing analysis, bro. All day providing trades and analysis. Here. All day I'm in here trying to give you the best ideas that I can give you. And Josh is like, but it costs money. You were saying YouTube don't pay you much. Because it doesn't. XRP, please. I'm just going to ignore where I think this person is from that's asking me about XRP. Hint, there's about 1.5 billion people in that country. Okay. ES got to London low. Kenny, what's up, bro? And I think NQ will get to at least midnight. I hope Tesla will raise further and I'm long on it. Well, there's your problem. Hope is not a strategy. All right, guys, I'm going to sign off. For those of you in the Discord, I'll see you in the Discord. If you want to join, link is in the description. Gave you guys a couple of great trade ideas with the shorts, even though a lot of people were asking, why are you going short if the news is good? I think there will be another short coming up here on NQ back to midnight. We'll see. If you're in the Discord, I'll see you in there. Otherwise, appreciate you rocking with me. Leave a like on your way out, and I'll see you in the next video. Appreciate you. Peace.